Hi everyone, I'm Joe Carter, the founder of the Twinflame Group and partner with the franchise consulting company. I want to thank you for taking time out of your busy schedule to listen to the $2 million mistake, why revenue isn't value. Whether you're running your own business or scaling through franchising, this is for you. I've lived on both sides of the table. I've been the owner, pouring everything into a business. And I've been the guy across the table deciding what that business is really worth. After a decade in corporate, I made the leap into franchise ownership. I wore every hat, fought for every customer, and eventually sold. That exit hit 7 times EBITDA, double the industry average. On paper, it was a huge win, but here's the catch. It also taught me a brutal lesson. Buyers didn't care about my grind. They cared about systems, margins, and whether the business could run without me. I left money on the table because too much of the value lived inside my head, not in documented processes. So I doubled down, built differently. That next exit hit over 14 times EBITDA, a 9-figure win for myself and my partners. But even then, I discovered a $3.8 million value gap that I hadn't seen until I worked inside private equity. That was a gut punch. Millions gone. 2 million during the first exit, 3.8 during the second exit, because systems were never fully documented. That moment lit a fire in me. It stopped being about my exits, and it became about helping other founders avoid that same regret. Inside private equity, I sat through over 400 due diligence reviews on deals that totaled over $14 billion. I saw how one missing process can knock millions of dollars off of an offer, or how a documented system can add multiple turns to your valuation overnight. And here's what's new. I'll be sharing all of that with you today. I've spent the last 2 decades building and refining my strategic sales playbook. Systems like speed to lead and sales closing secrets. These aren't just theories. I've used them myself to drive millions of dollars in revenue. And I've helped hundreds of clients drive over $1 billion in revenue in 19 completely different industries. What I'll share today works, whether you're in HVAC, healthcare, franchising, or tech. You may have seen my work in the Franchise Journal, Texas Developer, Texas Today, USA Wire, or USA Reporter, or my recent TV spot on Fox 5 San Diego. But here is what ultimately matters today. Buyers don't pay for hustle. They pay for transferable value. That's what we're building together right now. Too many founders chase scale without knowing what they're actually scaling. The truth is, revenue isn't value. I learned that the hard way. 3 months after I sold my company, the buyer flipped it for 8 times more. Same business, same numbers. That mistake cost me $2 million. Today, you get that $2 million education for free. Ultimately, you can double revenue and still be completely unsellable. Here's the truth that buyers already know. They don't pay for hustle. They pay for systems. That's what I didn't understand during that first exit. And that blind spot left $2 million on the table for me. But today, here's the difference. I'm handing you the roadmap that I wish I had back then. The same playbook that closes gaps that buyers exploit, and the same sales frameworks that drive revenues buyers compete for. So here's a quick check. Grab your pen. If you were to disappear from your company for 90 days, what would happen to your revenue? Does it grow? Flatline? Collapse? Write it down. That single answer will tell you more about your business value than your last tax return. This isn't a pitch that's disguised as a webinar. This is a working session. By the end of this hour, some of you will walk away with a clear plan. Others, you'll go back to business as usual. And in a year, your value gap will be even bigger. Most consultants will tell you to go and grow revenue. That advice cost me $2 million. Here's the truth. The businesses that sell for 10 times multiplier, they need their owners the least. The ones that get stuck at 3 times, they can't survive without them. By the end of this webinar, you will know exactly which category you're currently building. Now, let's calculate what buyers actually see when they look at your business. All right, so you have heard the textbook definition of EBITDA: earnings before interest, taxes, depreciation, and amortization. But here is the founder's version. EBITDA is simply your real operating profit before the accountants dress it up or strip it down. And here is why it matters so much. Buyers don't value your company on revenue. They value it on EBITDA, because that is a number that shows how much true cash the business produces. When I say that I sold at 3 times EBITDA, that meant that the buyer paid me 3 times more than my annual operating profit. Later, I watched that same business sell again for 8 times. Same contracts, same customers. The difference? Systems, margins, transferability. And that single swing is what cost me $2 million. So if you take nothing else from today, take this. Revenue gets attention. EBITDA gets you paid. So now let's look at some reality check stats. In the first half of this year alone, we've uncovered over $37 million in hidden valuation gaps. Not revenue gaps, valuation gaps. That's money that founders thought that they had until buyers started digging in. And the red flags, they showed up every single time. Owners too critical to operations. Processes living inside someone's head. Margins that collapse the second growth hits. But here's one story that fires me up every single time. A client came in at 3.4x EBITDA, around $7 million. 90 days later, without adding a single dollar of revenue, they were at 7.2, nearly $15 million. Same team, same contracts, same customers. The difference? Systems documented, leadership cadence in place, and a business that was finally positioned to be transferable. Here's the hard truth. Buyers don't pay for hustle. They pay for the machine that runs without you. When they see a machine, they pay premiums. When they see chaos wrapped in effort, they discount fast. So circle one for yourself right now. Documented processes, or everything in your head, or maybe a mix of both. Be honest, because this is exactly where hidden value lies. Ultimately, here's the truth. You can double your revenue and still be completely unsellable. I've seen it myself. Again, buyers don't pay for hustle. They don't pay for how hard you work or how many hours you grind. They pay for systems. They pay for predictability. They pay for a business that runs without you. And that is what I didn't understand. That misunderstanding cost me $2 million. And tonight I'm handing you the roadmap that I wish I had. The one that closes the gap. The one that makes your business worth buying. Because if it can't run without you, you don't own a business. You own a job. So let me show you how these levers play out in the real world. Meet B&B Roustabout. They didn't start with investors or big equipment. Back in 1994, it was just a dad and a truck, taking on small oil field jobs. His son grew up riding shotgun, learning the trade from the ground up. Fast forward a few decades, that son is now the majority owner. and his partner, his best friend. The guy known for fixing problems that no one else could touch. On paper, they looked impressive. $7 million in annual revenue, nearly 40% gross margins, crews in the field, and a rock-solid reputation. But when we dug in, this is what we saw inside. No documented systems. Every approval lived in the heads of the owners. Burnout everywhere, with long nights, constant fires. They weren't scaling a company. They were running themselves into the ground. That is the danger zone that so many operators live in. The revenue looks strong, but there's no structure. And without structure, there's no transferable value. Without systems and independence, you don't own a business. You own a stressful job that happens to throw off some income. And no buyer or franchise partner will pay a premium for that. So write down the last big decision that you made. Who else on your team could have made it if you were not there? Going back to B&B, what was holding B&B back? The bottleneck was founder-driven growth. Every single thing, every decision, every invoice, every fire ran through them. They weren't supported by a system. They were the system. The hard truth is there was no SOPs, no leadership layer, and no way for the business to run without them. And buyers spot that instantly. When they do, they don't see opportunity, they see risk. And here's another angle. A business this dependent on the founder could never scale as a franchise. Without documented systems and a leadership layer, you cannot replicate success across multiple locations with different owners. The truth is, when a company can't run without you, you don't own a business, you own a job. And that is when buyers walk away. Or worse, they discount you so hard that you barely recognize the offer. And it's the same reason a potential franchise partner would walk away too. No one wants to buy or replicate your chaos. So make a list of 3 recurring fires that you put out every week. Those are your bottleneck clues. Here's the shift that we helped B&B to make, and the same shift that could change everything for you. We pulled every process out of their heads and built clear playbooks. We trained their team so that execution didn't depend on those 2 owners. Leverage is everything. Think of it like a content waterfall. One pillar piece of work can be multiplied across 26 different platforms. That's the same mindset that you need for your business systems. Build it once, scale it many. It's also the mindset behind turning a strong business into a franchise, because your playbooks, they become the blueprint that others can follow to replicate your success in new markets. That single move unlocks 3 critical things for B&B. Time. The owners were no longer trapped inside of every decision. Trust. The team knew exactly how to run operations without second guessing. And transferability. The business became something that a buyer or potential franchisee could run, scale, and pay a premium for. The truth is, when you stop being the bottleneck and start building documented systems, you unlock freedom and real enterprise value that can expand far beyond your own 4 walls. So, how do you actually make that shift? We use what I call the founder independence framework. Here is the mindset shift. Hustle builds income, but systems build equity. First, we build operational systems so the business doesn't rely on your daily grind. Second, we install leadership layers so the decisions don't bottleneck at the top. Third, we document everything so that a buyer or franchise partner can pick it up and run with it. When those 3 pieces are in place, the whole game changes. Now, instead of the business owning you, you own an asset that buyers and partners want to buy into. That's the difference between being stuck at 3 times EBITDA and positioning yourself for 7 or even 10 times multipliers. That is where hidden value becomes real enterprise value. So quick exercise, grab a notepad, write down one process in your business that only lives inside your head right now. That's your starting point. That is your first unlock. Because the truth is, this is where hidden value turns into real enterprise value. This is the strategic value framework. The 4 biggest gaps that kill your multiplier. I didn't just study these, I lived them, and they cost me $2 million. The first, systems versus you. I thought being irreplaceable made me valuable. But the truth is, it made me the biggest liability in my business. When I sold, I was the bottleneck that was disguised as the solution. The buyer saw it instantly and flipped my business for a premium just by fixing what I couldn't see. Second, predictable versus personal. I leaned too hard on personal relationships. Buyers, they don't pay for your Rolodex. They pay for predictable revenue streams. If the business relies on you to bring in sales, they discount you or walk away. Third, documented versus in your head. Everything lived in my head. Pricing, client handling, problem solving. But buyers don't pay for what's inside your head. If it's not documented, it's not transferable. And if it's not transferable, it's not valuable. And fourth, leaders versus followers. At the time, I had employees, but not leaders. Employees execute. Leaders think. Buyers pay premiums for companies with leadership teams who can run and grow the company without you. So those are the 4 traps. Systems versus you. Predictable versus personal. Documented versus in your head. And leaders versus followers. Leave those gaps open and your multiple shrinks. Close them and buyers compete for your business. Quick exercise, write this down. Audit, systemize, elevate. Which one do you need most right now? Put a star next to it. So now let's shift gears. You've seen how hidden value gaps can kill your multiple. But here's the other side of the equation. The way you sell today shapes the value of your business tomorrow. This is the strategic sales playbook. The goal isn't just to help you to sell more. It's to help you sell smarter, sell faster, and scale value. Because too many founders chase revenue without building something transferable. I'm gonna walk you through 18 proven sales plays, the exact ones I used to drive millions in revenue myself, and that I've taught hundreds of clients who collectively have driven over $1 billion across 19 different industries. Here's the punchline. These plays don't just close deals. They build systems that buyers will pay a premium for. Revenue comes and goes, but a repeatable, transferable sales engine, that's equity. Here's the roadmap for where we are going. We'll start with the big picture. Why sales execution so often breaks down. Because if you don't know why it's breaking, you'll just keep hustling harder in the wrong direction. Then we'll dive into the 18 sales plays that I've built and tested for over 2 decades. I've used these myself, driving millions of dollars in revenue, coaching hundreds of clients who've driven over $1 billion in revenue. The plays are grouped into 6 categories: creating demand, converting faster, closing with value, retaining and expanding, recovering at-risk accounts, and winning back churned customers. Finally, we will bring it full circle. We'll wrap with the real goal, not just hitting your sales numbers today, but building a business that buyers will pay a premium for tomorrow. Because sales activity is good, but a sales system, that is value. Let's talk about what's happening in the market right now. Sales cycles are getting longer. Buying committees are getting bigger. And wallets, they're getting tighter. Most teams respond the same way, by just pushing harder. More calls, more emails, more grind. But here's the problem. Effort without direction isn't the answer. Here's the truth that you've been hearing me say all day long. Revenue isn't value. Buyers don't pay for hustle. They pay for systems. And that's exactly what this playbook is designed to give you. Repeatable plays, proven systems, a way to turn raw activity into real outcomes. Outcomes that not only grow sales, but also grow transferable enterprise value. Because anyone can push harder, but the founders who win, they build systems that work harder than they do. So now, let's set the record straight. These 18 plays aren't theory. They are field-tested moves that I've used myself, driving millions of dollars in revenue. Watching clients across 19 industries use them to generate over $1 billion in sales. Here's what they're built to do. Spot real buying signals so that you stop chasing ghosts. Accelerate deals that are stuck in limbo because speed wins. Retain customers with value, not desperate discounts. And expand accounts without adding friction. Let me address the objection that I hear the most. Joe, that might work in tech or healthcare or SAS, but not in my industry. Let me give you a quick case study. When I first rolled these plays out into the landscaping industry, the pushback was immediate. I heard it from owners, sales reps, even operation guys. Joe, this process won't work with our type of clientele. But here's what happened when we committed anyway. We shifted focus to commercial accounts with recurring revenue streams. We trained business developers to run the same plays across 5 different states. We stayed disciplined. No shortcuts. Our industry is different. Excuses. The result? Over $90 million in annual revenue that year alone. So here's the truth. It's never about the industry. It's about your commitment to the process. And when you run the plays with discipline, the plays work, period. So let's start with demand. Here's the brutal truth. Most sales teams burn mountains of cash, chasing cold leads, endless dials, endless emails, and endless effort. And what they get? A pipeline full of maybe someday. But buyers don't buy because you chase them. They buy because they already have intent. The real skill isn't in chasing harder. It's in spotting the signals that actually matter. Here's where these first 3 plays come in. They help you to do 3 things. Recognize buying signals earlier than your competitors. Turn those signals into real conversations. And do it without wasting time on people who were never gonna buy in the first place. Think about it. If you only chase people who were already raising their hands, how much faster would your sales cycle move? This is where sales stops being a grind and starts being a system. Let's break down play 1. Time is the new intent. Here's the move. When a visitor spends more than 3 minutes on a product or service page, that's not random browsing. That's intent. But here's the mistake that most teams make. They let that moment slip away. By the time they finally reach out, the buyer has already moved on. Or worse, they've talked to your competitor. Here's what you do instead. Track it. alert your SDR instantly, and launch personalized outreach right then, while they're still on the page or within minutes of leaving it. Proof? I've seen this one shift double conversion rates just by shrinking the response time. Because in today's market, time isn't just money. Time is intent. The faster you act, the higher your close rate, period. Now let's talk about play 2. If a prospect is spending time on a third-party review site, they're already problem aware. They're kicking tires. They are also shopping for solutions. They're not kicking tires. They're shopping for solutions. Here's the move. Identify the company or individual. Tag the buying committee as necessary. And send out what I call the value gap email. The key is, don't just pitch. Show them the gap between where they are and where they want to be. And position yourself as the bridge between those 2 points. Because when someone is reading reviews, they are basically raising their hand. You don't need to convince them that they have a problem. You just need to show them that you're the one that will fix it. That's when the moment can turn from interest into pipeline, fast. Now, let's talk speed. Deals don't usually die because of price. They don't die because of competition. They die in the gap between buyer intent and your response. That moment matters more than you think. Buyers today expect instant answers. And if you don't give it to them, someone else will. The next 3 plays are all about eliminating friction and converting interest before it fades. Here's the truth. Speed isn't just a sales advantage anymore. It's the expectation. And if you miss it, you lose. Number 1, speed to lead. Inbound demo request, you've got 90 seconds. Not 9 minutes, not 90 minutes, 90 seconds. Here's the play. Put it straight to your SDR. Fire the alert and call back instantly. Don't stop there. Back it up with a quick text or email. Why so urgent? Because the data is brutal. Conversion rates are 8 times higher if you respond within 5 minutes. Think about that. Same lead, same buyer, same pitch. The only difference? Speed. Speed doesn't just win deals. It decides who even gets a chance to compete. Number 2, the unfinished handshake. Think about this. A prospect engages your chatbot, but doesn't convert. Most teams write that off as a missed opportunity or a dead lead. But here's the truth. It's not a loss. It's an unfinished handshake. Here's the play. Capture the transcript. Match it to the account. And follow it up with a simple message. Something as easy as, hey, I saw you asked about X. Here's the quick answer. Here's my calendar if you'd like to dive deeper. That's it. No pitch, no rush, just picking up the conversation where they left off. Because in sales, it's not the first outreach that wins. It's the one that follows through. Number 3, collective intent. Here's a signal that most teams completely miss. When multiple people from the same company hit your site or content within 1 week, that's not coincidence. That's collective intent. Most reps treat them as one-off leads. That's a huge mistake. Here's the play. Auto flag that account. Assign it to your account executive and engage the entire buying committee. Because here's the truth. Companies don't buy in ones. They buy in groups. If you're talking to one person, you're selling. If you're talking to 5, you're closing. So when you see collective intent, don't treat it like casual interest. Treat it like a deal that's already in motion. Here's something that most founders and sales teams underestimate. Momentum kills deals if you lose it. The longer a deal stalls, the more doubt will creep in. The more competitors will slip in. And the more your buyer will start to look for discounts. The next plays are about keeping value front and center. Not pressure, not push, but guiding the deal forward so that you control the pace, not the buyer's inbox. The truth is, buyers don't buy because they're interested. They buy because you made the next step clear, easy, and tied directly to value. That's how you protect margin. That's how you move from chasing deals to closing them at a premium. So here's the open loop reset. No movement in 30 days? That's not a maybe. That's a red flag. Here's where most teams blow it. They send another weak nudge from the SDR, something like just checking in. That doesn't move deals. Instead, you escalate. You flip the play. Have a VP or even the founder step in with what I call the open loop reset. It's a short, personal message that does two things. It reopens the loop, reminding them why they were interested in the first place. And it gives a clear next step or incentive, a reason to re-engage now, not someday. And here's the kicker. Senior voices restart stalled momentums faster than any drip sequence ever will. Buyers think if the founder or VP took time, this must matter. So instead of chasing with noise, you reset with authority. That's how you bring dead deals back to life and close them with value instead of with discounts. Now, let's talk reposition, not retreating. Let's talk about one of the most uncomfortable moments in sales, your mid-conversation. And the buyer drops a line, we're also looking at competitor X. Most salespeople freeze in that moment. Some even backpedal. Worst of all, some get defensive and the deal slips away. Here's the mindset shift. When a competitor gets mentioned, don't retreat. That's not a threat. It's an opening. You launch what I call the why us versus them nurture. Step 1, acknowledge the comparison. Because if you ignore it, the buyer assumes you can't win it. Step 2, reposition with proof. Not features, not hype. Proof. Example, one of my clients switched from that competitor and saw a 34% higher return on investment in the next 6 months. That story lands harder than any feature battle ever will. Here's the mantra. Reposition. Don't retreat. When buyers mention competitors, they are handing you the frame of the conversation. Use it or lose it. Next, ghost recovery. Let's be real. No-shows happen. But here's the difference between average sales teams and professional sales teams. Amateurs, they take it personally. They sit around, frustrated, thinking that the deal is dead. The pros, they follow up fast, within 12 hours. Here's the exact play. Track the miss. Send a short re-engagement email. Something like, hey, it looks like we missed each other. Let's get you rebooked. Drop them a quick rebook cadence. Multiple touches, short burst, not spread out over weeks. Why? Because ghosts don't scare professionals. Persistence is what wins. And let me tell you, more deals come back from this play than you'd expect. The buyer didn't say no. They just said not right now. Your job is to be there when they are ready. Remember this line. No-shows aren't dead deals. They're delayed deals. That's how pros think. And next, retain, and expand. Here's the truth. Growth does not stop at the close. In fact, the cheapest, highest margin revenue that you'll ever win is the revenue hiding inside your existing accounts. Think about it. They already trust you. They've already bought from you. They've already shown you that they will spend money. The question is, are you leaving money on the table? This section is about the 4 plays that protect what you've worked so hard to win already. Increase adoption so that your solution actually sticks, and expand trust so that customers don't stay with you, they grow with you. I've seen this firsthand across multiple industries. One client doubled revenue without adding a single new logo, simply by running these plays inside the accounts they already had. Remember this, retention is revenue and expansion is profit. That is how you turn today's win into tomorrow's legacy growth. Now, the expansion sweet spot. Here's one of my favorite hidden growth levers: adoption gaps. If an account is sitting under 60% adoption, that's untapped revenue just waiting for you. Think about it. They already bought in. They already trust your solution, but half of their team isn't using it. That's not a closed account. That is an expansion opportunity. Here's what you do. Pull the seat data, spot the gaps, and pitch additional seats. Start with accounts that have 10 to 60% utilization rate, because that is your sweet spot for expansion. And let me tell you, this works across industries. I've seen companies leave millions on the table because they simply never looked inside their own accounts. So here's a quick exercise. Write down 3 customers right now who are only partially utilizing the full offerings of services you have. Those names, that's your pipeline, and it's sitting right under your nose. Now, the 90-day window. Here's a $1 million timing play. 90 days after purchase is pure gold. Why? Because by then, your customer has had just enough time to see wins, but not enough time for habits or frustrations to set in. This is your shot to lock in trust and multiply it. Here's what I do. I highlight their early wins. Show them the return on investment that they've already gotten. Introduce a complementary product or service, something that naturally fits in the direction they're heading, and bundle it with a simple offer. Not a hard sell, it's a trust sale. The key phrase, what's working? Let's scale it. That one line opens the door to expansion without feeling like a sales pitch. So quick exercise. Look at your customer list. Who's sitting between 60 and 120 day mark right now? That's your hot zone. Don't let it slip. Now, new product and feature expansion. It's one of my favorite expansion plays. The new product or feature launches. Most people treat launches like a marketing event. Wrong. It's a sales excuse, a conversation unlock. Here's the formula. Segment your accounts. Figure out who would benefit most from this new product or service. Send them a demo invite, paired up with a real case study. Then have your account executive follow up with a phone call. Why does this work? Because it launches reignited interest. They're a reason to circle back without sounding pushy. The call to action is simple. New tools, same mission, your scale. Here's the truth. Every new feature is another chance to resell trust. Don't waste it. Quick exercise. Think of one customer you haven't talked to in months. Which feature or service could you use as an excuse to check in with them tomorrow? Write it down. Now, at-risk recovery. Here's the truth. Churn whispers before it screams. The trick is listening early. There are two huge warning signs that you cannot ignore. Low adoption engagement. If your product or service isn't being used, that is your first sign of churn. Underuse equals risk. The fix? Trigger quick win campaigns to boost adoption before they disappear. At-risk customer surveys. I'm talking quarterly NPS and pulse checks. These aren't vanity scores, they're radar. They flag problems before renewal. And here's the magic. If you catch them early, you can fix them. If you wait until renewal time, it's too late. Losing a customer costs you 5 times more than keeping one. At-risk recovery isn't retention. It's protecting your enterprise value. So here's a quick question. If I asked your team today, who's most likely to get churned in the next 90 days? Would the entire team have a confident answer? If not, that's your red flag. Now, let's shift gears and talk about one of the biggest silent killers of enterprise value, churn. Here's the reality. Churn rarely comes as a surprise. It whispers before it screams. If you listen closely, the signals are always there. The good news is you don't need to guess. There are proven plays that help you spot risk early and save accounts before they slip away. Every customer you keep is one less that you have to replace. And when you save a client, you don't just protect revenue, you protect the multiplier on your business. Now, let's talk about churn. Churn isn't final. Just because an account left doesn't mean it's gone forever. If you've leveled up your offering, fixed what's broken, or added new capabilities, those former clients may be primed to come back. The next 2 plays are all about exactly that, turning yesterday's exits into tomorrow's entries, because sometimes your best new customer is your old one. Every lost customer leaves a clue. The mistake that most companies make is they just record the loss. They move on, but every lost deal is actually a data set. You've got to capture it. Why did they leave? What did we miss? What did we fail to deliver? Record churn reasons. Segment them. Track missed opportunities. Because here's the truth. When you analyze those patterns, you don't just learn how to stop future losses. You also identify the exact way to win those customers back. So don't just record the loss. Record the lesson. Now, the 90-day re-engage. It's the most powerful move that most companies miss. At 90 days, you've got the perfect window to re-engage churned customers. By then, you've had time to fix what was broken, but it's still fresh enough in their minds that they remember the pain that drove them away. So here's what you do. Revisit the exact reason they left. Craft an updated offer, and then include a demo or trial to show the improvement that you've made in action. The truth is, timing plus progress flips yesterday's no into today's yes. Here's the exact line that I use. You left. We leveled up. Let's talk. Closing. Here's what I want you to walk away with. The goal isn't just more revenue. It's more value. Every single play that we've covered, from creating demand to accelerating deals to retaining and expanding customers, is designed with one bigger purpose in mind. Not just helping you win sales today, but building a company worth buying tomorrow. Because at the end of the day, Revenue pays the bills, but enterprise value, that's what changes your future. That's the real goal. Smarter sales that create lasting enterprise value. So how do we actually close the gap? 3 steps. First, audit. Find where value is leaking in your business. Maybe it's systems that only live in your head. Maybe it's revenue that depends on your personal relationships. That's your first diagnostic. Second, systemize. This is where we apply the founder independence framework. We pull the processes out of your head. We train your team. We make execution repeatable and transferable. Independence is the goal. Third, elevate. This is about positioning. Positioning the business not just to run, but to scale, to transfer, to become something a buyer or even a franchisee can pick up, understand, and grow. That's the path from 3x to 10x or more multipliers. And here's the best part. It doesn't take years. It can start in 90 days. So here is my challenge for you today. Write down one process that you will document this week. It doesn't matter how small. It could be onboarding a client, running payroll, handling a customer complaint. It doesn't matter, just one. Because once you start pulling value out of your head and into systems, you're not just building income anymore. You're building something transferable. And that's what buyers pay premiums for. So here's the good news. You don't have to repeat the mistakes that I made. I built what we call the mistake-proof roadmap toolkit. It includes 3 parts. First, the $2 million mistake calculator. This shows you exactly where value is leaking out of your business. Second, the transferability gap audit. This reveals the hidden gaps that crushes multipliers and shows you how to close them. And third, the anti-mistake 90-day plan. This action plan helps you to close those gaps immediately. This is the toolkit I wish I had before I left $2 million on the table. And here's the best part. You can download it for free today. Just scan the QR code on the screen and get started. All right, so now it's your move. Please don't leave with just ideas. Leave with the next step. Book a complimentary discovery call using the QR code on the screen. On that call, I'll dig into your exact situation, whether that's scaling through franchise, boosting evaluation, or finally building a company that runs without you. When you schedule, you'll unlock all those toolkits and a streamlined strategic growth blueprint, completely free of charge. This is how you make the shift from operator to owner, from just income to equity buyers compete for, even if you never sell. Simple? Yes. Easy? No. Worth it? Absolutely. Let's get you booked. Before we wrap up, I want to make sure that you know where we can connect in person. The Great American Franchise Expo is hosting several upcoming events, and I'll be at these to meet you, answer your questions, and help you map out your next steps. New York and New Jersey on September the 6th and 7th. Washington, D.C. on September the 20th and 21st. Houston, Texas, October 25th and 26th. And rounding out the year in Dallas, Texas on November 8th and 9th. If you are anywhere near one of these cities, this is your chance to sit down with me and our team face to face. There will be hundreds of franchise brands at every event, each having walked in your shoes before, built a successful business, and taken the step to turn it into a legacy through franchising. We'll dive deeper into your business and show you exactly how to scale or franchise successfully. If you've been thinking that you need help walking through this, These events are your perfect opportunity. I hope to see you there. And finally, I want you to walk away with this statement. You are not just building a business. You are building something future generations will point to and say, that is what legacy looks like. Something that buyers fight for. Something your family is proud of. Something that earns you a seat at the table where real value is built. Every founder hits that moment where you either keep grinding or you build something bigger than yourself. This is that moment. This is your chapter. This is your shot to go from income to impact. Unlock your custom value roadmap, all the toolkits, the 90-day implementation plan, and a personalized strategic growth blueprint today, not someday. Let's make it legendary. Let's make it yours. Thank you, everyone.